with Ryan Irvine, President and CEO of KeyStone Financial. Thank you, Ryan, for your time.
Thanks for having us here.
All right. Can you tell us a little bit about KeyStone Financial?
Well, Keystone's an independent research firm. So by independent, I mean we are not paid by the companies that we do research on, which are the stocks that we cover, nor do we have a financing wing in our company that does financings for the companies that we cover. So we're fully independent. We have clients across Canada and the US who are individual investors and institutional investors. We give recommendations to them through research reports, particularly in the small cap area. That's where we started 18 years ago, but we also do income and dividend-based stocks as well. They pay us to give them and build them portfolios. So they pair our service with a discount brokerage, so they trade for around $10 a trade. We build them portfolios over a year to year and a half basis, where we buy one stock, basically one or two stocks a month, because we can only find really one or two that we really like through our extensive research at that time. And we don't say buy 2 or 3 stocks in the small cap sector. That's too much sector or individual company specific risk. We don't want to buy 30, because then you just bought the market. So the sweet spot is to buy 8 to 12 companies over that period, high quality, cash flow based investments that we have done extensive research on, where management owned, and you've got good cash in the bank and a good balance sheet, and you have a growth outlook going forward.
Interesting. So what are your criteria for choosing small cap stocks?
Yeah, well, we touched on that a little bit. We're looking at companies with earnings, solid businesses, and then growth at a reasonable price is our criteria, right? So you're looking at growth in a company, and is it trading at a reasonable price? And we value that based on the cash flow of the company, the business. We love companies that have a ton of cash in the bank, no debt, and have a growth outlook going forward. So it's really fundamental analysis. Then we dig in with management and look at the business underlying it, and if it has that strong growth path going forward, you pair that value with growth. You don't find that often. They're kind of strange bedfellows to see growth and value in the same bed together, but when you find that, it's a beautiful thing, and we get really excited about companies then and recommend them to our clients for long-term investments.
Right. So what trends are you seeing in the investing space right now?
Well, I mean, it's harder right now to find value, particularly, in the US we do find some value for Canadian investors. We've actually been invested largely in the US for our Canadian investors in part for a couple of years now, because the currency play has been excellent there. But it's a harder time in the US to find value because you've seen markets up for consecutive years. But we do find really specific individual businesses where we find value, and that's really what we're looking for. We don't look completely at the total market. We're looking more at individual companies to find a little tiny gem that's been overlooked, that has great value and growth. So some of the trends we're seeing right now is largely you're seeing some of the market overvalued, but you got to find those little pockets of growth that we look for, and we're seeing some of those in really specific companies that have growth long term.
Right. So do you have any favorite tech stocks?
Yeah, I mean, we can look at like a company that we call an orphan company in Canada. It's called Photon Control. PHO is their symbol on the TSX Venture. This is a company 2.5 years ago we recommended around 20 cents. We recommended just last year around 45 cents. Again this year at 60 cents. They're trading around $1. Now, what do? They kind of provide the backbone for the Internet of Things, which is a trend that we really believe has a tremendous growth profile ahead of it. So they provide optical sensors for the companies who build or put together semiconductors, and semiconductors are a huge part of the Internet of Things. So your toaster talking to your fridge saying, we need toast, and then ordering it online for you from the toast, your fridge ordering online you from Amazon.com. Apparently that's going to happen at some point, and you're going to get your toast delivered to your door. So those things are going to talk together. So interconnection of devices. Well, the semiconductors are in all of those devices. So a company like Photon, which builds and has optical sensors that are used in the production of semiconductors, is doing tremendous business right now. We saw a record year last year, record year this year, and going forward we see a record year. They have a record backlog right now, and the balance sheet is tremendous, which is what we love. $30 million in cash for a company that trades, at $1. That's 30 cents per share in cash. So you're really only paying, you take that $1, you take 30 cents out, you're paying 70 cents for the business outside of the cash. 8 cents in earnings this year. We see growth next year. It's about 9 times earnings, tremendous growth ahead of it. We see a business that's really a backbone for an industry with growth, which is what we like, and it's completely unknown. There's no analysts covering it right now, which is what we love. So you get to buy before analysts.
Right.
Funds will start to look at it now that it's crept above $1, and we think it can get an uptick in terms of the multiple that investors pay for the stock.
Right.
And those are some of the things we love to see.
Interesting. So do you think the new Trump administration is going to be good for tech?
It's an excellent question. Well, I think there are a lot of tech companies, some of the larger companies like an Apple, have a ton of cash overseas that they can repatriate back. So if you take that tax out, you could see money coming back to North America, which is an excellent thing.
Yeah.
Tech or non-tech, if the tax cuts that he's proposing for business come through, you immediately get an uptick in earnings. So that's going to be good for any sector. So Trump, he's going to be a definitely wild card, and we're going to watch it closely. But for tech, I think it's going to be good overall. There's some areas that we think that maybe he is not as forward-looking on tech.
Right.
But I mean, as far as the tax situation, that would help a lot of tech companies, particularly larger ones that have money overseas to bring it back.
Great. Thanks, Ryan. Thanks for your time.
Thank you. You can find us at www.keystocks.com.
All right. So this has been Pia for Investing News Network.